and welcome to this week's LOLC Securities Weekly Market Roundup. I am Megara Vijayman.
And I am Tharadu Amarasekara. This is the sound of profitability. The Cabinet of Sri Lanka approved the decision to call for investment proposals for the Charmers Granaries land in Colombo Fort, which belongs to the Urban Development Authority.
The Cabinet had approved the proposal to lease the land at Olkat Mawatha on a 99-year lease basis at the latest valuation by the Chief Valuer of the Government, Minister Jayatissa told the reporters. The land, measuring 9 acres, 2 roads and 31.75 purchase or 3.92 hectares, is located in a mixed development zone of a development plan prepared for the Colombo Municipal Council area for the period of 2022 to 2031. Land in the integrated mixed development zone can be used for projects with potential for residential, healthcare, office and institutional, commercial, educational, customer service centers, tourism, recreational and other activities.
According to customs officials, Sri Lanka is now charging all taxes on foreign parcels from online platforms, and all backlogs have been cleared without any de minimis exemptions being given. According to a statement by a custom official, before the crisis, about 1 to 2 billion rupees of revenues was earned and about 4 to 5 tons arrived daily. But daily shipments have stopped and now shipments are coming weekly about 3 times. He further added, they have minimized cost and changed their strategies. The backlog was partly due to a delay in the relevant companies getting approval from their platforms to pay the higher taxes.
According to official data, in the first 6 months to June 2025, Sri Lanka's tax revenues grew by 25% to 2.231 billion rupees, while the expenses have only grown by 13%.
Non-tax revenue grew 12% to 169.6 billion rupees. The capital expenditure was 223.9 billion rupees, down 9% from a year earlier and up from 175 billion rupees in May, Provisional Finance Ministry data shows. The current account deficit, a key fiscal metric which is total revenues less current spending, was down 48% to 185 billion rupees. In good budgeting, in the so-called golden rule of budgeting is to maintain a surplus in the current spending, which Sri Lanka has not been able to from the late 1980s. Within the 15% rise in current spending to 2,506 billion rupees, interest costs grew 10.7% to 1,264.6 billion rupees. Non-interest current spending grew 15% to 1,242 billion rupees. Sri Lanka's state salaries were increased in April and current spending is starting to pick up.
Sri Lanka's tourist arrivals increased by 6.6% compared to last year to 200,244 tourists arriving in July 2025, with most tourists coming in from India and the UK. There were 37,128 visitors from India in July 2025, making up 18.5% of total arrivals, followed by the UK with 23,475 visitors, making up 11.7% of arrivals. There were 15,556 visitors from the Netherlands, 12,982 from China, and 11,059 from France. The total foreign visitors for this year are 1,368,288. Visitors from other European countries as well as Canada and the USA picked up as the summer season progresses. And now it's time for the corporate highlights.
Diversified conglomerate Sunshine Holdings plc has delivered a resilient start to the fiscal year 2026 with 11.6% top-line growth in the first quarter.
The group recorded a consolidated revenue of Rs 15.9 billion, during the first quarter of the current financial year, up by 11.6% year-on-year, with profit after tax up by 20.6% year-on-year to Rs 1.7 billion. The group sustained this positive momentum across its core sectors healthcare, consumer and agribusiness, supported by improving economic conditions and a pickup in consumer activity. The group's healthcare sector emerged as the largest contributor to Sunshine's top line, accounting for 54.2% of total revenue, with consumer at 30.1% and agribusiness at 15.7% of the total revenue. Gross profit increased by 22.3% year-on-year to Rs 5.1 billion, with the group's gross profit margin expanding by 277 basis points to 31.8%. This growth was primarily driven by margin expansion in both agribusiness and consumer segments.
The Teejay Group has reported a resilient performance for the first quarter of the 2025-26 financial year. The group demonstrates its operational strength and strategic agility in the face of continued global market headwinds. The group recorded a profit after tax of 0.21 billion rupees for the quarter ended 30th June 2025. This reflects a notable 31% year-on-year growth. This achievement amid subdued global demand and currency headwinds underscores Teejay's ongoing focus on operational excellence and prudent financial management. Revenue for the quarter stood at 15.8 billion rupees, marking a 2% increase compared to the same period last year. Despite a challenging industry environment, including demand contraction and fluctuating price dynamics across key export markets, Teejay sustained its top line through its diversified global customer base and continued supply chain efficiency. The group's gross profit, however, declined by 3% year-on-year to 1.25 billion rupees, largely due to lower production volumes triggered by softened demand in international markets. Nevertheless, Teejay's operational resilience helped mitigate the impact and maintain profitability. Here is Tarindo with the ESG update.
Google will invest $6 billion in order to develop a 1 gigawatt data center and improve its power infrastructure in the southern Indian state of Andhra Pradesh.
Due to be built in the port city of Visakhapatnam, the data center investment includes $2 billion in renewable energy capacity that will be used to power the facility. The Search Giant's data center will be the largest in capacity and investment size in Asia and is part of a multi-billion-dollar expansion of its data center portfolio across the region in countries including Singapore, Malaysia and Thailand. In April, Alphabet said it will still be committed to spending some $75 billion this year to build data center capacity despite the economic uncertainty resulting from US President Donald Trump's global tariff offensive.
Here's Megara with the international update of the week.
OPEC Plus agreed on raising oil production by 547,000 barrels per day in September. This is the latest in a series of accelerated output hikes to regain market share as concerns mount over supply chain disruptions linked to Russia. Brent crude futures fell by 43 cents or 0.62% to $69.24 a barrel by 2,218 GMT, while US West Texas Intermediate crude was at $66.94 a barrel, which was down by 39 cents or 0.58% after both contracts closed about $2 a barrel lower. OPEC Plus agreed to raise oil production by 547,000 barrels per day for September, the latest in a series of accelerated output hikes to regain market share as concerns mount over potential supply disruptions linked to Russia. The move marks a full and early reversal of OPEC Plus's largest tranche of output cuts, plus a separate increase in output for the UAE amounting to about 2.5 million BPD, or about 2.4% of world demand. 8 OPEC Plus members held a brief virtual meeting amid increasing US pressure on India to halt Russian oil purchases. We are part of Washington's efforts to bring Moscow to the negotiating table for a peaceful deal with Ukraine.
And that's it for this week's LOLC Securities Weekly Market Roundup. No matter what investment decision you make it with the right intel. We will see you in a brand new week.